This is the briefing for Friday, May 22nd. For the past couple days, I've been talking about a head and shoulders pattern that could have been developing, and fortunately, I warned that for me anyway, a head and shoulders top is not a head and shoulders top until the neckline is broken. This being the neckline. This is the spiders on a 60-minute basis. So you can see what was developing here was a shoulder, a head, and then potentially another shoulder here. But once this high was taken out, this was Wednesday's high, once that high was taken out, the probabilities of that being a head and shoulders top decreased substantially. And then, of course, today you can see that, that there was not a head and shoulders top that was forming. And I wanted to bring this up because I think it's important in technical analysis that we see patterns, and we're trained to look at patterns because typically they repeat themselves in the markets or in financial instruments. But in this case, or in all cases, it's best to wait for a confirmation instead of trying to predict that a certain pattern is there and then taking a position expecting that pattern to play out when it doesn't. And that would have been the case if we had taken short positions either on Tuesday or Wednesday, expecting this to turn down and break this neckline, which came in right around the 731 area. Now, the other thing that I want to point out here is the fact that as of today, we had a double top, but it's not a double top until it turns down. So we have not seen a turn down yet, but in keeping or in developing your strategy for each day in the markets, we have to look at what all the possibilities are, and then we have to basically take the information from the market and analyze that market or that information and determine potentially which strategy has a higher probability of happening. Is this not a double top? Is it going higher? Is this potentially a double top and we're potentially going to see some type of a turn down? Or is this the beginning of a rotational pattern where we're going to see a test of this area right around the 731 area? So basically, what we have to do then is come up with a probability assessment of, is the market going to go up or is the market going to go down, based on the information that we have in our toolbox from our technical perspectives and based on the information the market gives us. So that's kind of where we are right now. I wanted to kind of discuss that because I think it's important not to predict what a pattern is developing, but to wait until that pattern develops and gives you a confirmation. And typically you're going to have a better, higher reward to risk trade in that case. Now, speaking of where we are right now, this is the spiders on an hourly basis, the Qs and the IWM. Now, I use a 60-minute chart for my analysis and basically looking at shorter term key reference areas or shorter term support and resistance areas. So in terms of resistance, it's pretty easy. The next level of resistance was today's high in all of the indices. And you can see it was a testing this high here, and the Russell kind of exceeded that slightly of this high here. So that's resistance. Today's high is the next level of resistance. Now to the downside, we've got a gap and a buying tail that came in here in today's trading. So basically at the low of the low of today, I should say, at around the 744.5 area would be the first level of support. And then of course we're looking at the next higher low, which would come in right around the 737 area for support in the spiders. In the Qs, we're looking at 715, and then below that's going to be right around the 707 area. In the IWM, we're looking at the 283, and then below that 278 area. Now, it's important to look at what's happening with this rally. And you can see in terms of the spider volume, you can see it is declining through the rally and even lower in today's trading. Same thing with the Qs and the same thing with the IWM. In terms of market breadth, you can see that basically the S&P 500 breadth was basically flat, or it has been flat. We've had some ups and downs, but it's been flat. In terms of the NASDAQ, though, market breadth diverged and diverged pretty significantly based on the fact that we had a higher high and testing this high as well. And the same thing with the IWM. Russell breadth was diverging as well. Looking at where we are in terms of net volume, the S&P 500, basically flat once again. No real divergence there, but there's a divergence in the NASDAQ and a divergence in the Russell. So what we're seeing is that the S&P 500 is holding up a little better from an internal perspective than the other two, but certainly we need to pay attention to what's happening in terms of the market internals within the indices themselves. And you can see this was the trend in volume for the spiders on a daily basis, and you can see the turn down that occurred in today's trading right here in the last couple of days. I guess that's the last 4 days of trading. 52-week highs minus 52-week lows ticked up slightly, but then you can see on a daily basis the trend in market breadth is basically down, testing the trend line yesterday, and then just a slight tick up in today's trading. So a little bit surprising that there's no real strength that's coming into the market from an internal perspective, yet we were able to do this rally, in this 4-day rally, testing the all-time highs. In the NASDAQ, we got a little bit different case. You can see the trend is down. We had a spike up for a couple days on the downtrend. This was the move here, and you can see that volume spiked above trend, but now back to trend as this 4-day rally occurred. Spiked above trend in terms of market breadth in the NYSE, but back down to trend in today's trading, even though we made a higher high. And the same thing with net volume. You can see it spiked up on Wednesday. Wednesday was as you remember from the briefing, was a fairly good day in terms of price development and market strength. But once again, and I discussed it in the Wednesday briefing, is that a lot of times we get a spike above the divergence that was occurring, and then the next day it is completely retraced, and that's exactly what happened here. Same thing with net volume. You can see it spiked above on Wednesday, but then the next 2 days it's been coming back down again. In terms of the Russell, you can see basically the same thing. Lower volume, then we got a spike in volume on the down move, and then lower volume once again on the rally. Breadth diverging, spike on Wednesday as the other indices, and then of course coming back to trend in today's trading, and the same thing with net volume, as you can see there. In terms of overbought and oversold, we are basically neutral, which is surprising, but not surprising at all is the fact that the reason we're neutral in terms of overbought and oversold is the fact that the internals are not strengthening in this rally. And that's something that we need to keep in the back of our minds going into the trading week for next week. Speaking of which, Monday is a holiday, the markets are closed, but Tuesday should be a very, very interesting day. In terms of total volume, you can see total volume absolutely collapsed today in the NYSE, and then net volume. This is up volume minus down volume, just really tanking. And once again, this still is very scary to see net volume declining in the NASDAQ like that, especially as price was our total volume was heading higher. And then of course we came down. And then it spiked above on Wednesday, and then of course coming back down again once again. A little bit of difference in the percentage of stocks above the 20 and 50-day moving averages. So we had a nice recovery this week of that in terms of the 20 and 50-day moving averages in the S&P 500 and the NASDAQ. Nice little recovery. But once again, if you look at where we were in terms of percentage of stocks above the 20-day moving average here, and you look at where price was here, and then you compare it to where we are today, and you can see that there's a huge divergence here. Same thing with percentage of stocks above the 50-day moving average. The same thing with the IWM, or I'm sorry, this is the Russell. So the percentage of stocks above the Russell, and then the percentage of stocks above the 50-day moving average is the same thing. So once again, we are in a position where we have the trend in price is up, but the market internals certainly are not suggesting that this is a strong rally. We're testing the all-time highs, as you can see once again, and is that a double top or not? I have no idea, but I'm going to be watching, because if we break this low, then that's going to suggest it's a double top, and we could be into another greater degree time and price counter trend rotation. Have a great weekend. I'll pick this back up on Tuesday for subscribers.